Good morning, everybody. Good afternoon to my friends in Europe. Here we are again. The S&P is up 35 points, so we're still not on the highs from yesterday, but the S&P's up, the Nasdaq's up, the Dow is down, and the reason behind the Dow is one, international business machines. IBM had some good earnings, but the market was looking for more. All right. So today, what we're going to talk about is I'm going to update you on where we are with the indexes and where we are with our risk levers. Then we're going to circle back and look at Tesla. We're going to look at IBM, and then I'm going to preview Google, and I'm going to talk to you a little bit about what I'm doing today, and then we'll go from there. So I will kind of dig in. So let's share my screen, and let's start with SPX. Again, it's up 0.7%, back above the 21-day moving average. This is key. Let's see it hold here and actually hold it. I would love to see it take out the highs. The level where where we feel pretty good is taking out the highs from April 9th. The high on April 9th, the close was 56.90. The high was 54.81. So if you want to use 56.90 is kind of your next level we need to break. That's appropriate. But that would signal that we're going to rally for another day or two at a minimum. All right, so there's that. Now the Qs, they look like they're in better shape. A lot of your favorite stocks are in there. Apple kind of running a little soft relative to the rest of the Mag 7. It's up about 0.5%. Amazon's up 1%. Broadcom's up 4%. Google's up 1.5%. I didn't think Google could rally. Meta and Microsoft are up, 1.3 and 2%, and Nvidia is up another 2% as well. So Tesla, and we're going to get to Tesla in a second. Tesla is up as well. All right. Now, again, the diamonds, Dow, now moving to positive despite IBM. The Dow is kind of its own thing. One of the areas where most of my stock is owned is in equal weight S&P. And that has been performing pretty well. The ETF is RSP. It's a little expensive to own, but I think they do a good job managing the book. All right. So again, we had a really nice day yesterday. Got a little bit softer as the day progressed once people realized that there wasn't an impending China softening. We gave some of that back. But we still made some progress yesterday. Remember, if you're not watching bonds, you're not watching the market. On Wednesday, part of the reason we opened so strong was the bond market, the long bond, so the 30-year, getting really strong. TLT touched 89 for the first time since April 8th. So it actually was showing some strength. As it pulled back, the market pulled back. Like, it's uncanny. Here, let me show you this. I want to go to 2-day, 5-day chart. So I'm going to go to a 5-day chart, but I'm really just going to focus on Wednesday. And I'm going to cut this for you. All right, and then we'll pull up SPY. And I want to run these under each other. Let's take a look. Bond market opens really strong and then kind of eases back all day. Market opens really strong, and then, you can see that this Violent sell-off in the market coincides with a big sell-off in bonds. And then the market stabilizing is because bonds basically flatline the rest of the day. Bonds are the market, folks. TLT is strong. IEF is strong. The market's going to be strong. Plain and simple. Now, that's not the only piece I'm watching. We're watching the Russell 2000. We'd like to see it leading. Today, it is not. Let me go back to the 1 day, to the 3-month chart. Today, IBM is not, but it was really strong on Wednesday, and it's up again. I'd like to see it hold this 21 day. We do that, and I think we're clean to 202, the 50-day moving average. But the strength in IWM is a bonus. Last but not least, we're watching the VIX. The VIX is currently at the lows from Wednesday. The low on Wednesday was 27.11. We're currently 27.31. That's bullish. All right, we break the lows from yesterday. Now we're in business. The spread between May and June continues to flatten up. It's down to about 45 cents. And remember what we want to see. We want to see these flatten up so that May and June are the same. You're saying, Mark, I don't want to spend $500 a month on LiveVol to track VIX futures. You're right. That doesn't seem economical, does it? I'll try again. I think you have to Google it. There's something weird when you type in the symbol versus when you search for it and click. But it's VIXCentral.com, and that will give you a free look at what this term structure looks like. That is VIXCentral.com. Now, it's not real time. You're 15-minute delayed, but I think this is, for what we use this for, I don't think you need real time. So there's our VIX term structure. Pretty straightforward. If you want to look at VIX Central, looks pretty darn similar. So we're watching that. And, when VIX flattens up and the bond and TLT kind of finally breaks over, bonds finally do break out. It's above 88. We get over 89. And, you're in a spot. Where we are right now, in terms of how I'm allocating dollars, is I am long. Now, I'm not crazy long. But I have leaned my positions slightly long here. Why? I think it's more likely that the bond market calms down and the S&P gets back to 5,600. That's where the 50-day is. At a minimum, I feel pretty good about threatening 55. So there's kind of where the market is as a whole. And to express that opinion, I'm using IWM. All right, now, to express being long, I'm using calls in IWM. Now, for Tesla, We told you Tuesday that option prices were going to rally and then fall and continue to fall. Tesla option prices are at the lowest they've been since February 28th. I am targeting, we are going to do a trade on Tesla in Delta Strike. All right. And I'm targeting my level between below 60. 60's here. If we got down to 50, I would be ecstatic. Because when Tesla gets to a 50, so this red line is option prices. Remember that, right? So option prices typically hang around 60. With the market action, they've been higher. But post earnings, we tend to see option prices get oversold. So that's when I can get an opportunity to buy on these real lows. Take a look at in January, right? We get this vol bump, this option price bump, and then by February 4th, February 6th, premiums are as cheap as you're going to see. Can you imagine if you had the wherewithal to buy a put on February 6th or on February 20th when those premiums got retested? So look what happens if you time this thing right. And this is what this special situation is all about. All right. So we get that post-earnings volatility crush. All right. I have two opportunities here. On February 6th, if I bought a put, and we can actually see this, folks. Let me show you this. This is kind of cool. I'm going to go to February 6th. I got to go to 3-month chart. February 6th. Here we go. So this is a snapshot of where option prices were at the end of the day on February 6th. So now, and at the time, Tesla is 374. Now I want you to imagine that you bought a 370 put. And we'll say you paid $12. Look at what happens with that trade. All right. On February 6th, we get a big sell-off. We get a nice 3-4 day sell-off. On October 11th, option prices go from 50 to 58, and Tesla has gone from 374 to 328. Let's see how our trade would have done. Even if we got out on, let's say, the 10th. Remember, option prices are much higher, and the stock has moved in our direction. My 370 puts go from 12 to almost 25. And if I magically did hold to the 11th, my puts would have been 42. But here's the best part. We get another chance to reload. I don't know what they were doing here, just absolutely demolishing Tesla options. So this red line, this tells you traders are just selling options. They're selling calls, they're selling puts. They're not buying. Poor choice. As we drop $100, And option premiums spike from 48 to 90. And they're doing it again. Take a look. We get a nice little earnings bounce. Option premiums are getting real cheap. We get down into this range, there's going to be an opportunity. Everything okay? Oh. I'll reset the router. All right. So the point is, my wife was walking around looking confused. I was just making sure she was all right. Now she's in the back. She's in the kitchen, cursing my name, if you will. Yes. All right. What if you bought a strangle rather than the put? You absolutely could. And that probably makes sense in this environment. Now, how do I know what traders are going to be doing with Tesla when I do this trade? But big money flow is what I want to see. Now, Tesla has a lot of volume today, but we don't have any large block orders trading yet today. All right, the biggest trade we have is like, penny call sale of the 320 calls expiring tomorrow, and this, in kind of weird put spread roll trade. So we don't have any like big large block buys. So what does that tell me? That big money isn't buying 2,500 or 5,000 Tesla options. What does that tell me? It tells me stalking, not sulking. The big money is watching this, and they're watching those option premiums, and they know they're going lower. They will buy when they feel, and when I say they, I mean Goldman. I mean JP Morgan. They will buy when they see that this red line has run its course, likely down here. All right, so one more time. And Justin, you can clip this. Here, Tesla is following the exact pattern that we are used to seeing on Tesla, and it creates opportunity. Last earnings cycle, option premiums get really bid. Option prices, after earnings, they come off, and they keep coming off. By February 6th, about a week after earnings, premiums are at year lows. So option prices are as low as they get. And if you bought this day, if you bought a put or even bought a strangle, or you had the opportunity to watch your option prices go up, this red line, and have the stock work in your favor. And we are going to see the exact same thing this quarter with Tesla. And I'm going to be doing this trade, probably a very similar trades in special situations across 5 names. And I'm going to be doing Tesla as well. And I may do this in Delta Strike as on top of special situations. So this is the pattern that is repeated every quarter. And I'm going to teach you guys as a part of my masterclass how to do this trade. And then the beautiful thing is you will have 4 opportunities a year to watch for this option price pattern. And when you see it, you'll know exactly what to do. So are Tesla option prices going lower? Yes. Do I know the direction of the stock? No. But I will know the direction of the stock by looking at when big money decides to buy options. That tells me there's a floor. The floor has been found in those option prices, and it's time to make my move. If big money buys a bunch of calls, the stock's probably going up. If they buy a bunch of puts, stock's going down. If they do position neutral, they're looking for movement. We will take advantage of one of those three. And the only way to do that, join my masterclass and get that special situation for free. And you can do that by clicking here. All right, now we've got two more things to hit on. IBM. IBM is down $13. You'll notice no huge order flow today. Same story. Look, option prices getting crushed. Take a look at the last earnings cycle. Now, what is different about IBM from the last earnings versus Tesla? Now, IBM does get that earnings crush. However, it gets sold to its baseline level. IBM doesn't do the same pattern of being oversold. This is why IBM is not on my list. So IBM, they're going to bring the premiums down. But they're going to bring them down to the base level of about 21 to 24. And they're probably, somewhere between 20 and 25. And then they're going to probably stop. Because we saw, look at all this action that we get in the the middle of February, and look at what options do. They do absolutely nothing. My option prices don't go up or down. So you don't have that same oversold nature that you get in Tesla. But these 5 names do, along with Tesla. So IBM, it's down, back to, kind of retested some of these lows from the real mess and is pulling back. I'm liking it to get back above that 150-day moving average at 232.89. Looks like it wants to break back over. It's going to be down on the day, but this might be a buying opportunity. Palantir looks strong, did not have earnings, but it looks strong. All right, now, last but not least, and then we'll put everything in a nice box, is big money always smart? That's a great question. And the answer is no. The answer is no. But the reason why big money isn't smart sometimes is that if you can't differentiate when they're using options to hedge versus when they're using options to express an opinion, you're going to run into some problems. Now let's look at Google. Google reports tonight. All right, now option premiums are already starting to come down here, but you can see how elevated they are. Post earnings, I mean, we're probably going to get back toward 30. I don't know if we're going to get all the way down to 24 in this environment. With the VIX 27, we might not. But we could see premiums get down to 30. Movement has been kind of subsiding. And if you look at their last earnings on the 4th, they kind of do the same thing. They don't get, Google doesn't really do anything for several weeks after their last earnings cycle. It has a tendency to be a little bit more boring after earnings than other stocks. So probably not on our list, although if they have some sort of sea change or they come up with something really interesting, that might change that dynamic. I mean, the piece for tonight's earnings that I'm kind of interested in learning about is the quantum. Any updates they have on quantum computing? Quantum computing. I'm kind of interested. All right, so there's that. You can see premiums have come off, but VIX has come off, but we're still really elevated. I mean, the last earnings cycle, option prices were at 38. We're currently at 41. There's going to be a nice premium collapse, probably back down, option price collapse, probably back down to the low 30s. That's what I'd be looking for. But I need to watch the stock a little bit. Now, looking at our earnings analysis, they are, when I say they, I mean big banks, Goldman Sachs, pricing in a 5.75% move. The median is usually about 4.25, although of late it's been more. You know, they're looking at some of the real old for the median. If you look at the last few quarters, 6.25, 6.30, 6.25, 6, 5.86, 5.12, 5.35, we're about in line. We're about in line of what we would expect. So what does that mean for Google tomorrow? It's trading 157.5. They're pricing in about a $9 move. $9.50 move. That's probably, a little, you look at Tesla, they underperformed. Right? They were looking for a 9.8, and we did 5.37. Get another 2% today. But it was a big miss in terms of movement. IBM, it's been down more. They were pricing in about a 6.86 move, and we're moving 6%. So about in line. Google might be the one that moves more, especially if they say something about the quantum side. I'm going to be paying very close attention to Google. All right, now, there's kind of your wrap up on Tesla, what I'm looking for there. There's our discussion on IBM and Google preview. Let's just kind of quickly take one more look at the markets. SPX is now up 66. Bonds are getting stronger. That is supportive of the S&P 500. IWM is getting stronger. We're now kind of testing the open from Wednesday. The high from Wednesday was 53.75.86. I mean, we got real close to that high yesterday. And right now we're testing the high from the 9th, which I'll remind you was 54.56.90. All right. Now, so what's going to happen today? I think we're going to meander higher. This feels very controlled. I'm not going to express like a real long opinion. Is there a bond auction today? If you want to see what bond auctions are coming, you go to Treasury Direct. The auction date, we're auctioning 44 billion 7-year bonds today. So that is big enough and close enough to a 10-year that we could get some action on that auction. So that's the one kind of hiccup for today that I would kind of be keeping my eye on. And I would note that VIX 9-day is still trading above VIX. We want to see that fold under. That could be the Fed. All right, folks. So today I walked you through my levers. My levers. We talked about where the S&P is and how bonds, if you're not watching bonds, you're not watching the market. We updated on IBM and the strength there, took a look at the VIX. Then we walked through kind of Tesla. I showed you exactly the pattern I'm looking for in Tesla, along with 5 other names. And then we looked at IBM and Google and previewed those. Then we closed up by looking at re-talking about the market. All right, everybody. Once again, I want you to invite you to join the masterclass. I think we have like 2 slots open. That's it. I'm going live with everybody. Maybe 1. I think we have 1 slot open left. So if you haven't jumped in yet, I'd like you to jump in. I will, Steve, don't worry. I'd like you to jump in. And then you can also take advantage of this special situation that's forming next week where we're going to trade those 5 earnings slots. Immediately following this, I did an interview on BNN yesterday, which is Canada's Business News Network. We're going to play that entire interview. It's only about 8 minutes, but I hope you'll enjoy. I don't know exactly what the questions they're going to ask me. I give them kind of some notes. So I think you'll enjoy the back and forth me and the trader have. You'll also notice there's a little tidbit on how retail traders think versus how institutional houses are trading this. So you can enjoy that. Once again, I am not going to be here tomorrow. Leisha will be in for me. I will be back on Monday. So you're getting a good look at Leisha's pitchforks and Leisha's level. We're going to play the BNN interview right now. So, folks, I hope you have a great rest of your morning. Leisha will be back with you tomorrow. Sign up for that masterclass. Fill that last slot before somebody else does. You can click the link here. So for Justin Brown, our biggest Leafs fan in all of Option Pit, I am Mark Sebastian. I am your only option. I hope you have a good one. Now let's roll some BNN.
Let's get more from Mark Sebastian, founder of Option Pit and Chief Investment Officer at Carmen Line. Mark, thanks very much indeed for joining us.
Great to be here, Andrew. Good to see you.
I know it's like a tennis match. We're watching the tariff comments, but now the journals, as you know, suggested maybe Trump would unilaterally bring down some duties, but his Treasury Secretary saying, nope, that's not going to happen.
Yeah, and I think it was a little bit, we keep jumping ahead of ourselves on some of these headlines. Just shows you that, psychologically, I think the thought process of retail traders and investment advisors, those not at the big bank level, their mentality is very different than your Goldman Sachs's and your JP Morgan's. They're using these rips to try and sell. Retail traders, investment advisors that have cash on the side, money managers, everybody that has cash on the side or used hedges to take that money off, they are terrified of this market ripping. And that is the one thing that would be really problematic for most of those types of money managers, smaller, less sophisticated, not from these huge banks. They need to catch the move up, and if they don't, they've got a problem. So we tend to see a little bit of extra volatility, both down and up, as these traders kind of get flipped in and out of being back in the market. Part of the reason why I think we continue to see these big intraday ranges.
Maybe you can have a look at an intraday for the S&P 500. That's interesting, though. You say the big sophisticated Wall Street players are sellers of stocks right now?
they're using these big bumps to they were buying several months ago. They're trading inside of this, not trying to invest. So yeah, they were buying on Monday, but now today, at those peaks, you could see positions coming off or being trimmed. Meanwhile, you've got retail traders and a lot of people with FOMO kind of jumping in. Once that initial FOMO kind of wanes in the morning, you get kind of the real price, and that appears to be where we've gotten to.
What about this much ballyhooed sell-off in U.S. assets? People reducing their people's confidence in America as a financial haven reduced. Is that a real thing? Is it likely to last?
I'm sure it is for some people. I don't think when you look systematically that it's enough to the people that are exiting is enough to really move the markets. Now, if that happens, you're going to really see it in the bond market first. We've seen some little echoes of China taking money out of the markets and a few others, because we've seen the long bond be extremely soft. We've seen the 10-year soften up, and we've seen some overnight ripples when liquidity is low of some real potential underneath pressures if rates do start to really rally. We start seeing the 30-year bond get to a 5% yield, then we're going to be having a very different discussion on what the S&P 500 is doing.
If that 10-year gets to 5%, because obviously that would increase funding costs for both the U.S. government and corporations.
Right, and that's also people that are buying houses. That 30-year is a good level for where their mortgages are. And the strength of U.S. housing has been one of the things that has allowed that wealth effect, even as the stock market has kind of pulled back a little bit, to give people some confidence. You get rates up, that's going to start really affecting housing. Now you're talking about people, for 90% of people, 95% of people, their biggest store of wealth, and that starts pulling back. That's when we have problems.
Let's talk about an individual stock, if that's okay. Sure. Intel, they're cutting up to or 20% of their staff. They're restructuring. I thought they'd done a lot of their restructuring anyway, but you say that this company's worth more broken up than intact right now.
Yeah, I mean, the management over the last 5 years has been such a destroyer of stockholder wealth. It's almost astounding. And yet they still hold all these valuable pieces, right? Obviously, the chip technology, the foundry, they still own a big chunk of Mobileye, I believe. There's a lot of different pieces of this. There's a reason why down here we know that like Qualcomm sniffing at them, some outside chip makers are. So, it'd be nice to see this stock finally make it, do something. It's been dead money or worse for 3 years plus. Maybe the best route at this point with the stock stuck in limbo is to explore, breaking the company up into its segment pieces and allowing them to operate.
Would you be a buyer of the stock now, or is it premature?
I own some. Just because, below $20, there's a lot of scenario. I have trouble seeing a lot of scenarios where I'm going to hemorrhage a lot of money owning Intel, and owning it down here is you're just basically hoping that banking on a turnaround happening, which I'm not so sure about, or eventually the company breaking it up itself into different pieces, and those pieces a year from now, 2 years from now, being worth a lot more than your initial investment in Intel.
The oil, the level of oil has you thinking that oil producers stocks are looking attractive in terms of valuation?
I mean, energy is priced in a pretty high odds of a U.S. recession, and I'm not sure that's fully justified. I think that there's definitely a higher risk of recession right now than there was 6 months ago or even 3 months ago. But when you look around and when you look at the smell test, when people get their stock statements back and the S&P is back here or a little bit higher, they're going to start feeling a lot better. And that probably at wealth effect provides a little bit of floor. Again, all this goes out the window if the bond market has a major hiccup. We're going to be, again, talking about a sub 5,000 S&P if that happens, maybe even 4,500. I don't think that's high odds of happening, but it's something retail traders and investors need to have in the back of their head is something to watch. If you're not looking at the bond market, you're basically not looking at the stock market.
Tesla, what are your thoughts there? Apparently, Musk is going to start focusing on the company he's CEO of again.
Yeah, it's amazing. They reported absolutely abysmal earnings. But if you watch the stock right when those earnings came out, it actually moved up, a percentage point or two. It was up, I think, $1.20. And when I saw that told me sentiment was so bad that that they were actually worried about something worse than the bad earnings that were released. Then Elon Musk gets on the call, says, I'm cutting back my Doge work and moving back into working with Tesla and robotics and all the cool stuff that we do here. And the stock pops and now it's potentially built an interesting floor. We've got to watch the next day or two to see how it behaves post earnings. But I would not be surprised if if the market stabilizes, if Tesla isn't one of your leaders as we begin kind of the long rally back towards 6,000.
Do you know, I've just realized the Doge of Venice was the head of state for the Republic of Venice for more than 1,000 years. I never made that connection. Anyway, Thank you very much, Mark. Always great hearing from you. Mark Sebastian, founder of Option Pit and Chief Investment Officer at Carmen Line.